Good afternoon. This is Craig Modelmog for the week ending October 30th. Hard to believe October's come and gone for this week's episode of Wall Street X's and O's. To kick things off here, the normal disclaimer, this show is merely my opinion and in many cases the narratives that I am gleaning from the marketplace, really focused on those facts that I think often get overlooked or don't gain much attention. They are neither the offer or solicitation to buy and or sell anything. It's really not advice to do anything. I'm trying to educate you and help people make their own better decisions. And stocks and bonds and investments in general are not FDIC insured, and they can and will lose money, as we have seen this week in the markets. So, hey, to kick things off, we've got a great show today. We're going to kind of give a little bit synopsis of where we're at. We're going to talk about volatility. We're going to kind of talk about the market's performance this week. Obviously, we're going to touch on unemployment, but kind of from a little bit different spin than normal. And then I am going to brush very quickly over COVID and what I'm more concerned about on that front. And then we're going to close it out on answering a question about what MMT is. And I'm going to provide a movie preview. Yeah, I'm turning into a movie critic, as I'm sure you're all just excited to hear. But anyway, let's get this thing rolling here. You know, we're basically operating and have been in the middle of a global pandemic. In less than a week, we are going to be faced with a very highly contested election, a very emotionally charged election on either side of the aisle. And we have a VIX index, which is the volatility index, which at this point in time is north of 35. And it's very unclear when or if the next fiscal or monetary policy program is going to be implemented. Very good chance nothing happens this year, although the president has said that he would vote something in post-election. To me, it probably depends on how the election goes for him. If he's pissed off, he may not be as willing. If he's happy, he probably will be as willing. So obviously time will tell, and time is definitely something we're going to see here. Stocks fell on Friday, that being today on October 30th, closing out a drop for the fourth time in the past 5 days in a retreat that added up to basically Wall Street's worst week since March. Okay, I think that you can attribute that to rising pandemic cases. We've got new shutdowns coming around or being implemented. And then we also saw a sell-off in large technology stocks that really dragged everything lower. The big five all reported this week. Okay, Apple, Amazon, Facebook, Microsoft, Google. You could also throw in there Netflix. You can also throw in there Twitter. It was kind of a tech-heavy week. Here's what was interesting. The only one that really knocked the cover off the ball, were actually really exceeded earnings expectations, Google. The rest, not so good. Markets got sucked down. I've talked for weeks and weeks and weeks about how narrow the market strength had been, meaning that these five big companies were really pulling everything upwards. And this week, it really pulled everything downwards. To close out the week, the market fell 2% today, the S&P did, and booked a loss for the week of minus 5.6, and also booked a loss for the month of October. So we're looking at back-to-back months of some pretty challenging market environments. I think the sell-off, like I said, has really come on the backs of a wave of the cases increasing, more lockdowns, not just here, but in Europe. This is kind of a global pandemic, okay? We're really seeing numbers rise all over the world. And to kind of move on to the COVID component, here's some just interesting facts. Globally, we're seeing between 450,000 and 500,000 new positive tests per day. Now, Again, I'm not over exaggerating that. I'm not making that stat more than it is. Is the world testing more than ever? They are. That is a definite. Okay. Europe had just north of 220,000 positive tests a days or tests a couple days ago, and are hitting new pandemic highs in what we're seeing most of those countries throughout Europe. And now, obviously, we're starting to see that here in the United States. In the U.S., we're now eclipsing the prior peak of daily new positive tests from this summer, which is when things were really amped up. And now we have 47 out of the 50 states currently have an R0 rating, which basically shows an active. Man, it is Friday, and sometimes I just can't get it out. I'm thinking it, and I just can't say it. But anyway, an R0 score of greater than 1. Okay, what this means is that a score of greater than 1 reflects active community spread. So right now, we are showing that 47 out of the 50 states are showing this positivity rate of greater than 1. Interesting. Let's move on here to jobless claims. Actually, you know what? We're going to go back here. Here is my key point. Am I concerned about contracting COVID? Yes, no. Am I hunting for it? Definitely not. I don't like to get sick, period. I'm always one that likes to stay pretty healthy, and I try to take good care of myself, getting good rest. I take my vitamins. I try to wash my hands. I've always been like that, and thus I stay fairly healthy. So I'm not hunting for it. Here's what I'm more concerned about, is that as this resurgence continues to take a stronger and stronger foothold, what have we seen in Colorado this week? Denver went to a safer at home lockdown, where now restaurants can only have 25% capacity, groups 10 or less. I mean, this is a statewide mandate. It's things that, again, they're being put in place to slow this down, which is fine. I'm more concerned about the economic impact, because if people are staying at home, they're not doing things, that means they're spending less money, they're going out to dinner, they're going out to lunch late, much less. Small businesses are going to continue to be impacted, and we're also butting up against the holiday season. So I'm more concerned about how that impacts the economy than I am getting it, okay? Also, an update here, Pfizer is most likely going to have some results coming out here in the next week, as I had mentioned last week. And then Moderna has their results from phase 3 coming out 2 to 3 weeks after that. So the likelihood of having anything out by year end as far as an actual vaccine being distributed, you know what, it may be a long shot, although they've done a pretty good job to this point. But, it is something that is going to be on the agenda, or basically happening starting next year in the first quarter. Definitely, side note here, and I'm not a physician, my doctor friends and clients have said, get the flu shot. If you haven't gotten it yet, get it. I have not gotten mine. I've been saying it all this week. Hey, I'm going to run downstairs and get it. Haven't done it. I've got the sticky on my computer. I'm going to get mine done next week. I want you guys to as well. Okay. Moving on here. Let's look at jobless claims. We're now in the 32nd week since the onset of the pandemic-driven increase in jobless claims. It's hard to believe it's been that long. Quick recap here. Normal unemployment benefits last 22 weeks. So we're basically on week 8, where lots of people are starting to drop out of the system. The reality is that what's driving most of the shifts in the dynamics of these numbers is this, okay? Continued claims do continue to fall. It is mostly due to people exhausting eligibility. It means they're dropping out of the system, okay? So that's kind of a false narrative that's out there. I shouldn't say false, it's true. It's just not a completely colorful narrative, okay? Those individuals who are losing eligibility, essentially they're either dropping off altogether, or they're rolling over to the PEUC claims, which those continue to go up. So while continued claims are dropping, the PEUC, which is what Trump put in place here about 6 weeks ago, which extended unemployment benefits at the state level, people are falling off traditional unemployment, falling on this PEUC, which those continue to go up. Okay, and those are things that, like I said, not a good number that we're going to see. And then once we get to the year end, all these benefits end on December 31st. So, case in point on how critical it was that some type of stimulus deal get done, because you still have a significant amount of Americans that are unemployed or underemployed, and now with no deal in place, the likelihood of a deal coming to fruition before year end is starting to become slim to none, which means that this is going to be a first quarter 2021 deal that most likely won't put checks in people's hands until probably February. Okay, that's a bad deal. I don't like to see that at all. Moving on here, the MMT, I got a few emails from you guys saying, Craig, what the heck is modern monetary theory? I'm going to break this down for you and put it in the simplest term that I can, okay? Okay, get ready for this because this is big. What MMT means is that deficits don't matter anymore. It means that the government can spend. They are not worried anymore about the nasty creature called a deficit that we've all grown up being taught to fear and be scared of. That, my friends, is going away. The main reason that we always hear about not wanting to run deficits up too high is it's going to lead to inflation. This is what we're taught. Okay. Well, if you think about it, rewind, Fed Chairman Powell, and you heard me talk about this, he had referenced wanting to run the economy hot or let it run hotter. The government for decades has been pegging inflation to 2%. The last 12 years, it has only been above 2% for about 2 to 3 months total. Okay, so they've been unsuccessful creating inflation, which I think is what's led them to this new MMT type of thing going, well, holy crap, we can continue to run at a massive deficit and we can actually increase that deficit and it's not causing inflation. Frightening, I know, because it's like, what is next, people? What is next? It's crazy. Crazy. Closing things out here. Tanya and I watched a movie on Netflix. It is a documentary. For those of you that go, oh, documentaries, don't do this to me. Listen, this documentary is called The Social Dilemma. Let me repeat myself. This is on Netflix. If you don't subscribe to Netflix, I would spend $10 for 1 month at least to watch this. You need to watch it. Your kids need to watch it. When I got done watching this, I was physically shaken and physically angry at what our social tools, our social media has turned into. What this show goes and interviews is all of these former bigwigs of Google, Facebook, Netflix, Snapchat, on and on. I could keep going. And these are the creators of it. These were the men and women that were doing the coding, that were creating these platforms, in which all of them said that this was really created for good and that they were shocked at how evil had taken over it. If you look at the fake news component, you look at Russia, China, Iran, North Korea, all trying to hack in. They've been doing this for decades, by the way. This is not a new thing where in 2016, oh, Russia tried to rig the... No, they've been doing this for decades. This is not new, and these people talk about that. They also talk about how fake news travels 6 times faster than the facts, of which you know how big I am on the facts. So that's why when I got done watching this, I was very disturbed. I almost wanted to pick my phone up and throw it, because I look at what it does to people. I look at our kids today. They're growing up and all they know is a smartphone, okay? I personally still remember telephones when the cord was hooked to the wall, all right? I remember when there were party lines. Do you guys remember party lines? If you're younger than 40 and you don't know what a party line is, look it up. Okay. I also remember my grandparents in Kansas, you only had to dial 4 stinking numbers to get their phone number when you were in Kansas. Crazy. Okay. This is just a whack deal. For as good as it is bad. And I really want you to be aware of this, okay? Because it's very important that you become aware of what this does and how it controls us, because it basically, our smartphones and these companies say, we know you better than you know yourself. That's a frightening thing when you really take a deep breath and contemplate the meaning of how technology out there and these platforms know us better than we know ourselves. It's feeding us stuff. It's feeding us news. It's feeding us things in which we really don't have a very well-rounded look at life as we know it. So when you think about how volatile politics are right now, how volatile this election is, this has been created by social media. This isn't being created by the BS of the Russians and China and them coming in to try to rig this deal. No, this is social media and how it is designed to work, impacting how we think. So I'm going to challenge everybody that listens to this stinking X's and O's this week. You need to watch this. It is critically important that you understand what your smartphone and what our technology is doing to us, because it is killing our society and it is killing free thinking. And I am going to shut it down on that note, because I'm probably going to start cussing because I'm getting fired up again. So anyway, for Wall Street X's and O's on Friday, October 30th, this is Craig Modelmog. Thank you for joining me. I love you guys. And until next week, I am out.